All right, guys. Joe Saglimbeni back. I know it's been a while, but I'm back, and it's Saturday, May 14th, 2022, and I'm here to try to calm people down because of this crazy week in the financial markets and maybe go over some lessons learned for all of us who are trying to invest in the stock market. All right, so look, guys. First of all, let me introduce myself, Joe Saglimbeni. This is my YouTube channel, Joe Saglimbeni, stock market investor for I think it's almost 4 decades now, blue collar worker, and this is my channel, and I'm gonna talk a little bit about stocks. I've been investing since I was 18 years old, and this week was horrendous. What a tough week in the markets, the stock markets, and even crypto. Though I think today I'm going to basically focus on the stock markets and try to point some lessons that everyone should have learned from all this correction this week. So I was talking to my cousin all week and even last week, and it's just been a terrible 2022 for the markets. And my cousin and I call him Philly Fudd because he's definitely more negative than I am. Uh, he's worried. He continues to reach out to me. He wants to know when it's going to end. When's this correction going to end? And what do I think? Is it going to be longer? Is it going to be worse than it is now? So I figure I'd come up today, Saturday. It's the first time I've done a live event in a while because I've been very busy. But everyone has been telling me to do something, to do some kind of video or to come live and try to calm people down. So I'm going to try to calm people down. So let me share some things on my screen here, and we're going to go over a couple of things. So when the year started out, I found this article. It's published by Surviving Tomorrow, and it had 10 events that could trigger a stock market crash in 2022. And if you read the article, it goes through different things: no more free money, raising the rates, talking about cryptos here, raising interest rates, COVID 22, politicians, the upcoming election cycle in November, China and Russia, and will Putin invade Ukraine, which he did. Real estate, crypto, of course, extreme weather events, which are nonsensical, and then a major cyber attack, which technically in crypto you could say that we had some kind of a attack with Terra Luna. But I am not going to talk too much about crypto. I am going to talk about the stock market here, and basically in these predictions, he really kind of said that there wasn't. So he said it was unlikely the American stock market will crash in 2022. And was from the author's name is Jared A. Brock. Well, he was wrong about that. But he said if these things or some combination of these things happened, there would be a crash. And then, of course, we have our great buddy Harry Dent. Harry Dent market crash has begun. Fireworks to blow up by June. But the thing with Harry is that he's been saying this for years, and he's always a pessimistic bear market guy, right? But what I really want to talk about is I think I should bring some lessons that I have learned over the decades that I have been investing. So when my cousin Phil was talking to me, he's been investing for about, I would say, a serious investor for a little bit over a decade now. He actually started investing after the '08 '09 Great Recession and the stock market crash that happened back in '08 '09. And he came up to me and said, Joe, is it going to be that bad? They're talking recession. They're talking 60% down on the NASDAQ. They're talking inflation, continued inflation, stagflation, interest rates going to 6, 7%. So I had to calm down my cousin, and basically, since I witnessed and was part of that '08 '09 stock market crash and the recession, I had a good stable job. I had a good union job. Actually, that's where I'm working right now. So I was employed, and I took advantage of that correction. But out in the streets, out on the avenues, out in the cities, there was definitely a recession. On the windows of stores, there wasn't signs that would say, looking for employees, we'll hire, help wanted. No, there was businesses closing, people were losing their houses, the financial sector and Wall Street, those people were also losing their jobs, and a recession started and probably lasted for about 3 or 4 years, really. I mean, they say it only lasted a couple of years, but the effects of it definitely went into 2010 and 2011. And that was like a 60, 70% drop in the NASDAQ. I think the S&P went down close to 20%, or a little bit more maybe. And everybody was worried. Everybody was running away from stocks. Well, at that time, I was a big Warren Buffett type investor. I really enjoyed Warren Buffett. I read a lot of the books that were written about him. I followed him. I watched him in interviews, and he always said, if there's like fire in the streets, that's when you go in and you go hard and you purchase. So I did. I purchased Mastercard and I purchased Starbucks, and I put as much money as I had to work. Now, before we start, no, I'm not giving any financial advice, just so you know. Full disclosure, I'm not a financial advisor. I don't even play one on YouTube. I'm just a guy, blue collar worker, giving his opinion on the state of the financial markets. So I went deep into these companies. And if anybody watches my channel, they'll know that I am not a trader. I'm a long term investor. And actually, back then, I was in the beginnings of truly becoming what I am now. I started really focusing on 12 to 20 stocks, quality stocks, and I held. I didn't do a lot of trading, buying and selling and buying and selling. So when Phil came up to me and he called me up and he said, "What do you think? You think we're going to go down like '08 '09?" And I told him, "Phil, I just don't think it's as bad as '08 '09. Now, anything could happen. But I think we're closer to the bottom than people may think." And I think that we we kind of got our numbers or close to our bad numbers, in my opinion. Now, again, no financial advice. So I want to calm everybody down and try to tell everyone to just calm down, relax, dollar cost average, buy quality companies, and you will reap the benefits from it. So let me go to in one of my favorite websites, and I'm also a subscriber to this paper, Investors Business Daily. Let me go there and show you how bad the market has been. So we're going to start with the Dow Jones. So right here is the Dow Jones as of Friday. And if you see right here, the Dow Jones is down 13% from its 52-week high. Now, I was telling my cousin Phil maybe a week and a half ago that I wanted to see this around 10%, and then I'll feel better to jump in. Well, we got our 10%. Okay? Now, the NASDAQ, let that load up a little bit. The NASDAQ is 27% down from its 52-week high. Now, all I wanted was 20% from this for me to get that feeling that we were done. Right here, if you guys notice, right here in March of 2020 is the pandemic correction right here. So this correction's not as quick, but almost as brutal. This correction is almost as brutal. I think that we may be there with the NASDAQ also, but the one index that everybody and what I really go by is the S&P 500. And let this load up here. The S&P 500 is down 16% off its 52-week high. Now, here's the COVID pandemic crash, and here's current. I think I was just looking for basically a 10% um, correction here. We got 16%. That's where we're at right now. Now, Investors Business Daily has the marketing correction. And this is a great little paper. It's expensive, the subscription, but nevertheless, you can learn a lot from this. But it's kind of technical. And I don't always want to kind of push it because it it has charting, it has revenue numbers, it has deep articles, has videos, but it's an expensive uh, subscription. So I only recommend it to the people that really want to get into the stock market. You don't have to buy Investors Business Daily to learn and be a good investor. You could just basically invest in quality companies. Maybe you go to your brokerage and you look at the articles or the analysts that analyze the material that's available on, let's say, Fidelity or Schwab or TD Ameritrade, and you use that and you make a thesis, your own thesis, and you focus with it. You focus on it. So currently, I am down from the beginning of the year. So I did a video a couple of weeks ago for my performance against the S&P 500 with my Roth IRA. And my Roth IRA is down. It's down about 15% from the new year. So it's not as bad as the NASDAQ. And actually, it's not as bad as the S&P 500. But why isn't it not as bad? Again, quality companies that pay dividends, grow their revenues, raise their dividends, and are market leaders with moats leaders in their industry. And if you do that on a downturn, you jump into these. So, for example, last week I put some money to work in my IRA towards a couple of equities. And I'm not going to get into it too much, but basically, we're blue chip companies, and I grabbed them. Then they had 15, 20% corrections. I grabbed some. And that's what I do if I am working and I have positive cash flow. I'll go in and I will invest in these great companies, even during bad times. So that's it, guys. I really wanted to just come on live today and explain some lessons that I have learned over the years. And the main gist of it is stay focused, dollar cost average into quality companies. And these corrections are just corrections. Even during the Great Recession, I was investing. All right, guys. So hope you guys enjoyed this. I hope to see you again Saturday. I want to make more live streams, and I hope to do it up and coming. I've been very busy at work, but I had to come up here because come on live because people were telling me you gotta say something. So calm down. I think we may be closer than the bottom, and that most of the pain has already happened. All right, guys. So if you like this live stream, this video, subscribe, share, let that algorithm work for me. It's good to see you guys again, and I will talk to you guys soon. Bye bye.